This is Farm Progress Company's Dateline Drought.com. It's presented by Genuity Drought Guard Hybrids. Hello, everyone. As I join you this Thursday evening, I can update the drought monitor situation for you. And I must say, there hasn't been any improvement. In fact, the latest drought monitor map showed the drought is spreading a little bit. It is intensifying in that Plain States region. If you look at Nebraska, there was no change in the past week. But Kansas, Oklahoma, and Texas, those three major wheat-growing states, all showed deterioration. Nationwide now, they say 42.5% of the adjacent 48 continental United States would be in at least severe drought, and that was a little deterioration in the past week. USDA is saying almost two-thirds of the winter wheat is affected by this drought. Now, you're looking at that, again, that Plain States region. That's where the hard red winter wheat is grown. That's the wheat that is used to bake our bread. The soft red winter wheat region is looking a little bit better. That's the region from Missouri through southern Illinois, southern Indiana, Ohio, also in that area straddling the Mississippi River down through the Delta region. And that soft red wheat is benefiting from better soil moisture. It's in better shape, all of the agronomists tell us. I want to mention a couple of things that are coming up on This Week in Agribusiness weather-wise. Our agricultural meteorologist Greg Solier will be sharing this coming weekend his 4-week weather forecast. He'll take us into that period right on into the early days of 2013 with that 4-week forecast in terms of not only precipitation, but also his temperature expectations. I believe, generally speaking, Greg has been saying that this winter should be more, quote, normal, certainly especially when compared to the winter of 2011-2012. One more thing you'll want to keep on your radar screen, Greg Solier, the last weekend of the year on This Week in Agribusiness, will take a peek at the spring season ahead. It's a special year-end broadcast of This Week in Agribusiness. Secretary of Agriculture Tom Vilsack will join us as Orion is interviewing him in the nation's capital. I'll be visiting with some agriculture broadcasters about the kind of year it was. And yes, Greg will have a little bit of a weather forecast peek at the spring of 2013. Again, that'll be the weekend of December 29th and 30th. Not only on RFD TV, but on 65 great local television stations that carry our show each weekend. We thank you for joining us here at DatelineDrought.com, presented by Genuity Drought Guard Hybrids. Now Bryce Knorr takes a look at the market situation.
Every day in these Dateline Drought market updates, I include price charts for corn, soybeans, and wheat. This gives you something to look at besides my talking head, but it's also because these charts are followed closely by traders who oftentimes base their decisions to buy or sell on what's happening to these so-called technical indicators. For these traders, price charts not only show where futures have been, but maybe where they're going too. This also helps explain some of the erratic trading the markets have seen lately. Soybeans are a prime example. January futures looked like they were finally ready to break higher yesterday after moving above their trend line drawn off fall highs. That's the red line on this chart. But the contract was unable to move through its 200-day moving average, the black line, which is a key indicator of long-term trends followed by chart traders from stocks to soybeans. Futures rallied up to that line again overnight before pulling back again during today's session when prices fell, testing the old resistance line as well as the 2-week channel off mid-November lows. That's the blue line on the chart. Futures finally held at that point, with January reversing higher to post modest gains, ending up 1 3/4 on the day to 1455.5. March corn has also been in an uptrend since mid-November lows were confirmed, and moving averages were also in play for that contract. The market is traded between its 100-day moving average, the red line above the market, and support at its 50-day average, the black line, below the market. Corn tested both its uptrending channel and the moving average today before firming a little. March ended the session down 2 3/4 at 7.52. These chart signals have proven bearish for wheat despite some positive fundamental news on dry weather on the plains and the sale of U.S. wheat to Egypt over the weekend. Chicago March couldn't hold its support line off November lows, the blue line, and failed in a bid to retake its 50-day moving average, the red line. It finished down 4 1/4 at 856.5. Kansas City March, meanwhile, couldn't hold the move above its 50 and 100-day moving averages, testing its support line on Tuesday as well. KC settled down 4 1/4 at 902.5. In Minneapolis, the March contract tested its support line Monday, then closed below it today, though it did finish well off its lows, ending down only 3 at 929.25. Keep up with the drought situation across the country by visiting www.datelinedrought.com.